From the trading floor of the NYMEX, I'm Jill Malandrino for TheStreet with your commodity wrap-up. And it's relatively flat this week in gold. Are traders looking towards next Wednesday with the FOMC rate decision?
Well, certainly with the way the markets have been reacting, the FOMC meeting will definitely be in traders' mind for the gold, with rates possibly going higher or taking out that statement of lower for longer. If that comes out, we could see some little bit of fireworks.
And what levels are you looking at in the near term up into the meeting?
The resilience of gold has been very important lately, especially with the absolute utter destruction of the energy sector. Much like copper has been holding its own also, a little bit of rally. Matter of fact, the only thing green today. Gold certainly looks like it wants to test that double top in the 100-day moving average at 1240. Maybe even test the real resistance on the last move up to around 1250, 1256. But then all bets are off until the FOMC meeting. But it's got a little wind to the sails. Some people have been pushing to the downside, and they might have to cover those shorts up.
Well, longer term, you've been a bear, and I know when we look at equities, for example, when stocks are bid up into an earnings print, it makes traders a little bit nervous. Are you concerned at all that it has been this stable and even looking to go higher into the meeting?
Certainly with the strength of the dollar over the last period of time has continued my bearishness, but I think the debasing of the other currencies had actually put a little bid into the gold because the people are concerned that the currency value is losing its luster, which puts the bid back into gold a little bit. So just because of stronger dollar shows how weak the rest of them are.
And finally, copper, why is that performing better than the other metals?
We've actually had a strike in Peru. There was a strike in Peru earlier this month. They called it off, and the action was illegal, according to the government. The strike is back on. Small support, but basically worse numbers out of Chinese adds to more stimulus concerns, and more stimulus is always good for copper.
Okay, thanks very much, Zuc. Let's switch gears and look at the energy complex. Pete, let's take our viewers back to a couple of months ago when we were looking at the Goldman Sachs 2015 Outlook piece. And I had asked you, is $75 for crude a reasonable level? And you had said, Jill, it can go even lower and we can see 50 handle. Well, we're at 57 right now.
Yeah.
What are your expectations from here?
Well, until something changes fundamentally or something changes technically on a daily chart, you look ahead to the weeklies and monthlies, it really still looks like a sale. And I'm wondering that as we fall, if the momentum can actually pick up. And I'm also wondering, with these countries that are building their budgets around $80 crude, $90 crude, $100 crude, $110 crude, what are they going to do to compensate for that in the future?
Right.
Maybe have to sell more to get in more dollars?
Well, you would think, even if you look at the bigger picture, so many analysts in the media are hyped up because 2014 is going to look good for the consumer because oil prices are lower. Mm-hmm. In my mind, I think there's a bigger story than that because there's a lot of geopolitical and economic implications from a global perspective that something's going to have to give somewhere. This oversupplied glut can only go on for so long.
I would think so, but what's going to happen when these countries aren't meeting their budgets? Does that mean they're going into a recession? Does it mean there could be a global recession? Will it affect us or just be good for us? I would think that for us, lower prices just means better for the consumer, better for everyday people having more money to spend, and that's how I see it here. But globally, I think it could affect a lot of countries.
So what near-term levels are you looking at?
We're looking definitely at $50, but one of the perspectives I always bring up is if in 2009 we pulled back to $33 without there being North American shale, bigger Chinese and global demand, you got to be really careful about picking a bottom here. Now, after saying that, at any time something could happen geopolitically to turn this thing around again. But unless that happens and nothing happens fundamentally to change things, I think it's still quite a bearish market.
Okay, thanks very much, Pete.
You're welcome.
From the trading floor of the NYMEX, I'm Jill Malandrino for TheStreet.